everybody. I hope you're doing well. It's Lane here with MetaShackle. Today I'm going to show you something that I've developed. It's a technique that I've used for quite a while in trading, and I'm still working on refining it and making it better, but it's something that I've come up with on my own. A lot of people have heard of SMC, known as Smart Money Concepts, that were developed by ICT, Inner Circle Trader, who is arguably one of the best day traders that have ever lived, and who pioneered and developed many concepts that a large portion of day traders and swing traders use today based on trading algorithms that run markets. Now, it's kind of similar to ICT's approach, but to where he uses the fair value gaps as entry points, my idea is a little bit different. This is what I call grafting. This might not be very interesting to people who just buy spot positions or buy physical coins to hold them, but if you're an active day or swing trader, you'll find this very interesting. And the reason why you've never heard of this anywhere, you've never seen this, you don't know anything about this, is because I have developed this myself, and it's a technique that I use. And frankly, I can't believe I'm telling anybody about it, because I always told myself that I would keep this secret. So this is the XRP chart. I'm on the 4-hour chart. This was the breakout in November. Since we got to the top here at about that 192 level, we've been consolidating heavily, just so you know where we are. Now you'll notice when the price was rising up here, it sets these flag patterns. It comes up, consolidates, breaks out, sets a small flag, breaks out. Well, we came out and topped here. So now that we're to the point to where we have multiple points that we can put these trend lines down so that we can formulate where this flag pattern is, we have an obvious pennant flag that we've been trading within going back to when we set the high on the 3rd of December in 2024. Now, what I'm going to show you is very interesting. I generally only trade XRP and Solana because to where I trade a prop firm account now, that's my focus. And by trading an institutional account, I'm very limited in the amount of leverage that I can use on any position, especially when trading crypto, because institutional accounts generally favor commodities, indices, and currency pairs. So you'll notice that generally when these little pennant patterns form, they have 5 waves within them. It'll be 1, 2, 3, 4, breaking out on the 5th. 1, 2, 3, 4, breaking out on the 5th. And what we're seeing now in the larger pennant flag is very similar. We have a 1, 2, 3, 4, 5. So if we're going to break out of this pennant, most likely it's going to happen on this run, on this 5th run. And if it doesn't, it will fall back down and potentially make another run the 7th time. But the vast majority of times when you see these patterns, if you look at them and do a count, you'll see that it breaks out on the 5th. But now that we have these trend lines in place, I'm going to show you something that's going to blow your mind. And this, as far as I know, only works on XRP. You want to drop down to the 15-minute chart. Now what we're going to do is we're going to go to the leading edge of this pennant flag where the breakout was. So we have the top marked here and the bottom marked here. So what we are going to do is we are going to mark off certain candles. And these candles are going to blow your mind. Now what you're looking for is in the lower pennant where your lower trend line comes. You're looking for the area where the breakout occurred. So when this did break out, it broke out right here. So what you're looking for is a weak doji candle that correlates with the breakout. And I can see it right here. So what you want to do, you can see right here, the top of this wimpy, just pathetically weak doji candle. Like meaningless. It doesn't mean anything. It's nothing. It's just literally a stick with a line in it. Nobody would even pay attention to this. Now I'm going to put a line marking the very top of this that basically goes all the way through the chart. And try to get it as accurate as you can. Always mark the top. Now you can see it correlates right here where this candle broke on it, then it dipped down in, and then price went up. Now I'm going to erase this. And one thing that I generally like to do is I like to find another one in this lower set here. You're looking for the highest within this set, within this pennant down here. You're looking for the weakest doji candle that is up the highest. And from what I can see, it's right here. So we're also going to mark out this doji. And you're doing this so it's extending all the way across the chart. Now that we've marked the high and low of the bottom range, we're going to come up to the next set. Next place where we started to get resistance. And I can see it right here. We're going to mark out, see this thin little doji right here? The first one. We're going to mark this one out. Now it's correlating to the price breakout. Dipped in, bounced off, price broke out. That's very important. Now we're going to go to the next set, which right here, to where this one fell back, I do have quite a bit of experience doing this. So right now, just looking at it, I can tell which one I would mark. I would want to mark this doji here. And that's just a matter of experience. Granted, we do have some weak dojis. There's a weak doji here. There's a series of 3 weak ones here. And I will mark these ones here because the breakout occurred. But I don't want to play with these because it's in the same area as this one. So there's only a little bit of difference between them, and generally you want the one on the back side of the breakup. The first ones that came into play are the strongest. Now, since these dojis are in play right here in this area, I'm going to go ahead and mark one of these out as well because it's next to the breakout. So I want to mark this area so that I can refer to it. And just looking at it, I say that'd probably be the one right there that I'd go with. This weak doji right here. Now we're going to continue up. So now we're getting to the point to where we are at the top of this set. This is where the high was set at the 293 range. We can see this came up, set the high, and it broke to the downside. And when it did, it broke to the downside in this area. So this doji candle right here before it waterfalled is very important to focus on. So I can already tell you, basically looking at this pattern right now, that this weak doji here is the one you want to mark. And that's going to represent the bottom side. And then you want to look around in the pattern. You can see there's another weak doji here. There's another weak doji here. Whichever one correlates the best with this doji is the one you want to mark. And you can see that it's right here. And that doji where the failure occurred is literally right in the middle of those two. And if you look at it, you can see once we came up, set the high and broke down, it came up in that area, retested twice and failed. And then even later on when it came back, it still didn't get back up to that point before it broke down. Now, just for reference, this green line right here is marking the all-time high. So, looking at this pattern right here, we now have all these lines, all these grid lines coming across our chart. Now, this is very interesting because this first set that we marked, this lower range, if you look at the entire range that we have marked out on the chart, on the 4-hour chart, you can see that this is basically what we're dealing with here. It's marked out a bunch of grids for us.